Hey there, welcome back to Great Quarter, guys. This is episode 68 of the show where the lines between freight and finance are none. I'm your host, Andrew Cox, senior retail analyst here at FreightWaves, and this is the one after Seth. Seth Holm has left. He was my co-host for some time. Today I've got Zach Strickland, the Sultan of Sonar, stepping up to the plate to join for a jam-packed show. We're going to get this going quickly because we've got a busy schedule and a lot for you today. We've got a fantastic guest in the back half of the show. We've got Rick Watson. He is the founder and CEO of RMW Commerce Consulting in New York City. We're going to be talking about the looming battle that is going on or will be going on between UPS and Amazon in the next few years. He has some great insights on that front. But before we do that, let's go ahead and start with our chart of the day. Zach and I each have one for you today. Mine is on lumber prices. This is just something unbelievable. The lumber futures for delivery later this month have closed at just under $1,600 per 1,000 foot of board. That is 4 times the historical average. The historical average there is the orange line. You can see the previous 5-year average just below $400. Right now at $1,600. Futures rose, here you go, Zach. Futures rose by the maximum amount in 9 of April's 21 trading days. Unbelievable. Last April, 40% of the North American sawmill capacity was put offline, and demand has been ridiculous with housing starts and with people doing renovations. We have an incredible just supply and demand imbalance right now in the lumber market, and this is spilling over to many of the different commodities, which we'll talk a little bit about during our ISM PMI segment. But Zach, I will pass it to you for your chart of the day.
Yeah, I went ahead and picked out the ACT Research 3, 4, and 5-year used truck price. Now, I picked this one because it kind of flows with what we're talking about in terms of commodity pricing. Like, if you look at these used truck prices, we're seeing supply chain bottlenecks throughout the space in terms of just getting the raw materials where they need to be. Lumber, of course, also has a direct-to-consumer effect. But upstream in the middleman, a lot of the carriers are having trouble sourcing some of their trucks and their equipment. You know, we have the semiconductor shortage, but we also have a lot of other raw materials in that process that you're not going to be able to rely on those orders getting to the carriers in a timely manner, you know, especially in their normal 6 to 9 month cycle. So you see this in all 3 prices. Now, not every time do all 3 of these prices move in sync like you're seeing right now. And you can see that they bottomed out last year and have been rising a lot more quickly here over the last couple of months. The 3-year number tends to be the one that moves a little bit more independently of the 4 and 5, depending on the models and certain kind of issues and nuances in there. But when the 4 and 5 start moving higher, like we're seeing right now, that means that you can anticipate continued issues, especially in the fleet equipment market.
All right, well, thank you, Zach. We'll definitely be watching that. We've got a lot going on in the new truck orders and used truck prices, a lot to be watching for on the capacity front. All right, let's do buy or sell. This is a new segment we brought in last week. I've got some statements or some rumors that I've heard, and Zach, you'll tell me whether you're buying or you're selling this idea. So a FreightWaves favorite, Amit Mehrotra of Deutsche Bank, he believes the powerful surge in demand and pricing now coursing through transport modes will last through the rest of 2021, continue through all of 2022, and could extend well into 2023. Zach, you buying or selling?
So I'm buying the first half of this and I'm selling the back half of it, because I think everybody's kind of, I mean, again, I'm probably taking the easy way out here. You know, anytime you're doing a long-term kind of prediction, there's a lot of variance that can happen. The front end of this, very sound. There's a lot of data supporting that we're going to see continued growth in the space, freight demand, inventory levels, et cetera. What is a little bit concerning to me is the quickness with which the economy rebounded. Anytime I see a large spike, I expect some sort of equal or opposite reaction. You know, it's basic physics here. This is kind of an overheated space that we're in right now. It feels like a bubble in a lot of different spaces. So to have a long-term growth cycle, I think you need to have a little bit more stable, you know, pattern on it.
I can't disagree. I'm going to withhold judgment on buy or sell because Amit is going to come on Great Quarter, guys. Next Tuesday, we're actually going to do it at 2 p.m. Eastern. JP Hamstead, Director of Passport Research, is also going to be with me, and we're going to dispel this idea in depth. But he's pointing to the industrial recovery. He thinks there's still pent-up consumer demand. I'm going to press him on that one. Housing strength, and there's still very depleted inventories. And he also pointed to the infrastructure bill, which I think this could be a huge boon for the trucking industry if it were to get passed. But we really need to move on because I've got a lot packed for today. So one more buy or sell. Self-driving truck software startup Plus is reportedly in talks to merge with the same investor group that brought public electric vehicle startup Canoe, as well as bus maker Bluebird and flatbed logistics specialist Dasky. You buying or selling?
Yeah, I'll buy this. It makes a lot of sense. If you look at a lot of other companies that are kind of doing the same thing and developing this autonomous technology, they're partnering with equipment makers and other technology providers. And this is a good, easy way for them to kind of have some, share ideas. You're wanting to grow fast because there's a lot of competition right now on the road for autonomous vehicles, especially in the level 4 space, which they are. And then you have, somebody that you can use like Deseki who can help you kind of test this out. And they operate in a very open space market in terms of the Texas oil fields and whatnot. So short haul, places that you can test this out. So there's a lot of potential here. I would buy this for sure.
Nice. I'm buying this as well. I haven't read the S1 yet, but when it comes out, I'll likely be buying the stock. I think this is a huge market. I like the kind of asset-light nature of their business. And again, as you said, this is a partnership game. Mm-hmm. They're partnered with four of the 10 biggest truck makers in the world. They've also got ties in China and the U.S., which I like, kind of like Too Simple as well. I'm buying this one. I hope they do come public. I'll probably buy some of the stock. All right, let's get on to You Care or Nah, and let's run through these three before we bring Rick on. First one is we've got another Mageddon, this one Pool Mageddon. There is a major chlorine shortage that is set to spoil the summertime fun in the swimming pool. Experts are calling it the worst chlorine shortage the country has ever seen. You care or no?
I absolutely care because it's summertime and it's the pools. They did say that it was really isolated into states like Florida, Texas, and some of the northern tier states where we saw this explosion of pool growth thanks to the pandemic. So, I mean, I do care, but I don't care because it doesn't target our state. Yes. Here in Tennessee. So I think it is a big deal to see a lot of this expensive chlorine because the pools, if they get shut down and everybody's got this pent up demand for getting outside, it's a big deal. And that will impact me when I go to Florida later in the year.
That's right.
So yeah, I do care on this one.
I'm going to say I don't care. The only thing I do care about this one is the potential. They threw some very scary things in the article that we were reading that, chlorine helps fight against mosquitoes. I hate mosquitoes. They help fight against the brain-eating amoeba. Didn't even know that was a thing. So there are a lot of diseases and things that I want to avoid. So I hope they get this chlorine shortage fixed. But in all, I don't have a pool. I don't spend much time in public pools. So it doesn't affect me that much. So I'm going to pass on Karen on this one. But all right, this next one I do care about. I'll foreshadow that the ISM PMI tumbled in April, down from 64.7 to 60.7%, missing expectations of 65. Zach, you care or no?
Yeah, I don't really care in the way that it's showing me that we're retracting. I don't think that that's a real sign that the industrial side is going to start slowing anytime soon. If you look at some of the underlying values here, a lot of the retraction is coming from supply chain problems. So they're not able to get some of the deliveries on time, and they're having trouble hiring people, which is a continued problem. So, also we're still expanding. Even with all these trouble, we're still expanding. The industrial economy is still on pace, and it's a nice, stable growth at this point in time. So I don't care at the moment, and certainly as we move on throughout the year, we're going to see some of these pressures ease. Mm-hmm. So I think there's still a lot of room for growth here. So just because we're having a little bit of a hiccup right now, I don't think it's a long-term concern.
I am with you. I do not care about this one yet. I'd say if we see a few months of this in a row consecutively, and we have the same fears of price inputs and difficulty hiring, I think that would be a trend to watch. But right now, as you said, demand is still expanding, although at a lower pace than it was last month. And something to note is that the panel sentiment comments that are made at the end of the survey, those are more positive than they were last month, even though the number came down. So no, I don't care about this one yet. I'm with you. I think we got good growth ahead of us. The inflation is something that it should be monitored. It's not, consumers aren't seeing it yet in most of these commodity prices, except for lumber. I don't know if you guys have seen the price of plywood at Home Depot right now. It's definitely translating consumers. The other ones haven't yet, but likely will at some point. All right, I know you're excited for this last one. Let's spend a couple minutes here. Robinhood versus Warren Buffett. At Berkshire's annual shareholder meeting, Buffett and Charlie Munger spent some time criticizing Robinhood. Buffett said that Robinhood became a significant part of the casino aspect of the casino group that has joined the stock market in the past year and a half or so. And Robinhood clapped back online, saying that if the last year has taught us anything, it is that people are tired of the Warren Buffetts and Charlie Mungers of the world acting like they are the only oracles of investing. Zach, you care or not?
I absolutely care. I gotta say that Warren Buffett is a personal idol of mine in general. So I grew up in finance and reading all his books and value investing. And this one kind of disappoints me coming from him. I understand why he said it. He's kind of embedded and ingrained in the high finance industry at this point. And his whole methodology is preaching value investing. And this to me is extremely, this helps get back to the roots of value investing, which the financial markets have been fundamentally separated from for over a decade now. When you're talking about quantitative and analytics and some of these hedge fund managers controlling a lot of the market. If you look at some of these stock prices, they do not at all line up with the intrinsic valuations of a lot of these companies anymore, and it doesn't make any sense. So, if anything, opening it back up to the public and to a wider range of investors will only help kind of move the market back to a value investing standpoint, which is honestly, in my opinion, the exact right way to view stocks. And also, Warren Buffett's been preaching this in his entire life.
I kind of care. I kind of don't care. I'm kind of in between here. I think if I would care more if Buffett and Munger had a better record in the last 20 years of investing. I feel like the market has, I won't say it's passed them by any means, because they're still very successful. They make lots of money, but I mean, other than Apple, they've kind of missed a lot of the technology stocks. They've missed most of the last 20 years of huge growth companies. So, I mean, who's to say that they really are, I'm kind of with Robinhood on that. They're not the only oracles to investing anymore. And here I am, a Robinhood user, have been for years. I'm with Robinhood on this one. And, sad to say, Buffett and Munger are getting old. And there's going to be a generation of millions of other investors that I hope will kids on Robinhood like me that will understand who Warren Buffett is and not remember him only for his fight and kind of criticizing young people for getting into gambling.
Well, also you kind of made the point that they haven't had a lot of success lately using this strategy because it's been so separated and unpredictable.
True. So fair point. All right, let me thank our sponsors for a moment, DDC FPO. This episode is brought to you by DDC FPO. DDC is a business process outsourcing provider that specializes in freight. Perhaps best known for freight billing, DDC recently launched IT outsourcing to help supply chain stakeholders hit development milestones without risking financial performance. Learn more at ddcfpo.com. All right, let's bring on Mr. Rick Watson. Rick, how are you, sir?
I'm doing great. Good to be back.
Rick, before we get into UPS versus Amazon, you got any thoughts on Buffett versus Robinhood?
I'm on the side of Buffett in this case.
Okay.
I think the big thing is these Robinhood investors feel like they're playing a game. That's not what value investing is all about, following the trends and being on Reddit message boards.
Well, that's fair enough.
Yeah, I'm definitely with that. I would just, my only thing before we get into the conversation is I hope, I don't have any data on this, but I would hope that there are a substantial majority of people that are not on the Discord channels, trading whatever ideas they think they have. And there are hopefully people like me that are buying good American companies and holding them for long term. I hope that.
Yeah, I think too, I think here initially they're getting a lot of press for some of these message board trading apps, but I don't think that that's a long-term situation with the Robinhood.
Because these people are going to get burnt.
Yeah.
They will get burnt and they will get burned out of the market. But all right, Rick, let's talk about what we're here to talk about, UPS and Amazon. What did you make of each company's earnings?
Yeah, I thought, the couple things. I think both companies had good earnings overall. Amazon, I think the biggest two stories are the growth of advertising and the growth of AWS on Amazon. Advertising had about a 70 to 80% year-over-year growth, which is obviously fueled by the pandemic and the rise of e-commerce. So that's a huge high margin business for Amazon. And then on the UPS side, they're continuing to expand with small and medium businesses. That's sort of the engine that's powering them right now, as the B2B business is sort of flat to maybe slightly up, and their margin and the revenue per unit is up at least 10% on the SMB segment. That's really powerful. Like all these small and medium shippers across the U.S. are, I think, powering their growth. So that's the big high level. And obviously, Amazon is investing hugely in logistics, which I'm sure we'll get to that in a second.
You want to go ahead?
Yeah. So what exactly do you see that a lot of people aren't seeing on this side of things? Like, do you see any kind of hidden gems here?
Like, I think the biggest thing is in a couple of years, Amazon's going to be a major shipper. It's just inevitable. If you look at the entire capital expenditures of UPS in 1 year, is $4 billion, and it's flat to slightly down year over year going into this year. So they're very much an organization that's optimizing cash. They're not trying to overinvest for capacity in the future. They're not trying to bet the farm on any one thing. Meanwhile, on the other hand, Amazon as a company invests $40 billion a year in capital expenditures to invest in the future and innovation. Over half of that is for what?
Logistics.
Logistics. 20, $25 billion versus $4 billion. These companies are going to compete one day, and it's going to be sooner than we think.
Well, let's talk about it. So, I know you probably don't have an exact estimate, but UPS, 13% of their revenue comes from Amazon as of Q3 last year. I don't know the most recent quarter, but it's a big part of their business. And I think that we're not so far away from the day that Amazon could flip that switch and be able to take over pretty much all of the operations that they give to UPS. So, how far do you expect that day to come, and how do you expect that transition to happen? They can't just flip the switch, right? It seems like ethically there would be some problems there.
Yeah, I think the short answer is just like everything else, Amazon is very surgical in their position about what routes they take on. And so I think it will start route by route. Um, and then picking off the most profitable UPS routes. And so I think that's one side of it. Second is Amazon has already started this journey in other countries. So they've set up as an independent shipper for small and medium businesses in the UK. And that was something that went live last year. They had a trial on this in California about 2 years ago that they shuttered during the pandemic. So I think you might see them later this year start to open that up again. But for sure by next year, if Amazon is not open as an independent shipper for at least some segment of the commercial market, I would be shocked.
So, Rick, let me ask you this. So, Amazon obviously has a record of kind of removing the intermediary and taking it on, all their operation on themselves. Do you see this as kind of like, some sort of major fallout if they start kind of taking over these lanes, and they rely heavily on UPS, and UPS has really, been supportive of this after investing in all this infrastructure that helps support the growth in Amazon's network, and then for Amazon potentially to come along and kind of rip that out from under them. Do you see any, rocky road here for this relationship?
Look, I think in the short term, both companies need to play nice. UPS can't afford not to have Amazon as a customer, and Amazon won't be bad mouthing UPS. UPS has very literally, they have the most reliable ground network in the country, bar none. Except for now Amazon coming up. But and so Amazon doesn't have a lot of alternatives either, to the extent that they're not ready to cover all these routes. So in the short term, I think in the next 2 years, these companies still need each other. But after that, I think the gloves are going to come off.
Yeah, you're definitely right about them not having much options. I mean, given the relationship with FedEx fell out, about 18 months ago or 2 years ago. Rick, talk to me about the UPS investments, because I think that you believe that these investments aren't so much trying to better the true service or adding capacity to the network, but rather focusing on kind of back-end things to help them be more efficient.
Yeah, there was such an interesting part of an earnings call 2 weeks back when the UPS CEO says, we're really focused on improving the customer value chain. And the two examples that she gave were so fascinating to me. The first example was, how can we quote prices to our customers faster? Meaning, like, how can we make our sales rep more efficient and reduce their time to sign new business? And then second is, she talked about a revamp of the UPS billing center. I mean, which is another way, like, how does UPS get paid faster by shippers? I mean, what does that have to do with anything in their network about how buyers get tracking numbers faster, about how their tracking information is more reliable or more detailed? It's just about cash flow. That's it. And increasing their margin a little bit. I mean, imagine this announcement by Amazon saying, like, we're really trying to make our customer experience better. And so we're going to start charging you 0.5% more on your rates. Amazon is about usually giving stuff away. Like, how much do you get in a Prime benefit now? Like, every year they keep adding more stuff to it.
Yeah, I think that's interesting. The what you point out there is kind of old school versus new school differences, especially since Amazon. I mean, even though they are kind of a veteran, they're new to the industry. They're new to all sorts of things. They're very innovative. in the way that they approach the transportation space for sure. So what kind of things do you think, do you think UPS, does have a chance here in terms of like realizing, okay, we do need to invest in other ways around, kind of developing our logistics networks to make us a stronger competitor potentially to Amazon in the future? Do you think they even realize that at this point? Or do you get the sense that they kind of are just going along kind of like, status quo, like a normal incumbent carrier would moving forward?
I think they're playing in the games that they know. I think for UPS to win, they need to be in markets that Amazon is not in, because in the markets that they're competing with Amazon is not a traditional carrier. There is no carrier that looks like Amazon because they have perfect information about the customer and the products transported. They have the payment and billing relationship with those end consumers. None of the shippers have anything like that. And so the analytics and data and predictive capability for what Amazon could build a perfect network for their customers. None of these shippers are even in the same ballpark with having that kind of capability.
Hey, Rick, I wanted to touch on something. You said markets that Amazon is not in, and I wanted to say that, they've got 500. Yeah, they've got 500 delivery stations now. I think they're going to have like 1,500 in the next couple of years. Like, what market is Amazon not going to be in?
I think they better. The short answer is you need to get there sooner. So I think B2B. So just like consumer e-commerce in the past 20 years has overgone the huge revolution. The next revolution is ethics and B2B. And I think hopefully that you need to become more digitized as an industry. And so you have lots of dusty old industries, from healthcare to, all sorts of ones that are really like industrial equipment and, CPG, even to some extent, how they're doing business. They just don't have a direct to consumer mindset. And so that supply chain is going to digitize, much like the consumer, traditional retail e-commerce supply chain is digitized. And it's not going to be small parcel format, but the carriers need to get ahead of that before Amazon, goes in from like their Amazon business segment and then starts to drive into those, those industries.
So do you see a way like where, the carriers and Amazon coexist kind of peacefully in the future? Or do you think this is really just an inevitability that Amazon's going to eventually just kind of take over as much of this e-commerce space logistically as possible?
I think it's an interesting question. I think takeover, logistics is a market where scale wins.
Mm-hmm.
And there can only be, traditionally, the small parcel market in the U.S. has been USPS, for all the light and small parcel volume, UPS, and then FedEx, kind of in like orders of magnitude. And number one has, 50, 60%. Number two has 20, 30%. Number three has 10 to 15%.
Right.
That's just true in the industry for 25 years. And I don't think that's going to change anytime soon. And to the extent that Amazon goes out to, for instance, Amazon is already covering 60, 70, 80% of their own volume now. If they go out to the next tier of customers that are not fulfilled by Amazon facilities and saying like, you know what, your service levels need to be 99.9%. What carrier is going to keep up with that? Amazon is setting the rules and offering the competitor.
Right.
So where are you going to go? We won't talk about monopoly and competition and those sorts of things. It seems a little unfair, but that's the America we're living in right now.
Yeah, it reminds me a lot of how Apple approaches their ecosystem. They present it as a choice, but it's a lose-lose for who's ever trying to make the choice. And it seems like Amazon is kind of, in this surgical way, I think that's the best way to put it, that kind of presenting the same option.
Right. Yeah, it's like, it's a heads I win, tails you lose. If you're going to win this route, it's going to be my least profitable route, and that's sort of where you're going to bid. And I'm going to keep bidding it to other people, in the network, so that I can drive your prices down, even if you win it.
Yeah. So do you see Amazon kind of controls the e-commerce game at this point in time? Do you see anybody else as a potential kind of threat to their taking some of their market share, or maybe even developing some sort of logistics situation that's going to encroach at all?
Yeah. I think there are a couple of options. I think the only two options are really Target and Walmart. I think Target, by definition, is not going to have. I mean, there's no one going to encroach on Walmart volume and scale. But I think from a consumer experience point of view, Target has done a lot of things right in the last 7 or 8 years to push the fulfillment from their stores and to create a really great consumer experience that is almost the opposite of Amazon's model, from working from big distribution centers that are scattered everywhere to the store, like small and medium store model, and fulfilling out of stores. Um, I think if you go into an industry by industry segment, so for instance, grocery, if you talk about something like Instacart is one model where they're trying to aggregate all the supermarkets in the world through one portal. GoPuff, for instance, has a completely different model that started on the college market, where they're trying to do micro fulfillment near the cities, but they want to be a vertically integrated retailer. They want to own the inventory, much like a brand would if they were manufacturing, but they want to be a one-stop shop.
Rick, I agree with you on Target. I was hoping you'd bring up Shopify. I would like to hear your thoughts on that conglomerate being a potential battle. And then I wanted to ask your thoughts on the Target sortation center. I'm sure you've heard the sortation center that opened outside of Minneapolis. They're now going to have ship drivers testing out, having ship drivers delivering boxed orders, e-commerce orders from the sortation center, not only delivering bagged groceries. I wanted to know if you had any thoughts on that trial.
Yeah, I think Target is very, very good at innovation. And I think their management team is extremely, still to this day, underappreciated in the industry in the way that they have taken these tests. They have specific financial targets and customer service metrics that they're looking for in these tests. They expand them to new cities, and then they keep going. There are very few companies that have this kind of level of multi-year patient innovation that Target has. People forget, in 2013, Target had 0 parcels shipping from stores. 0 parcels. Now they have 95+% of all parcels touch in some way their store infrastructure. So I think Target is, I'm very bullish on whatever Target is testing. You can almost like put a name on it, just because their executive team is that good and patient, and they'll throw it out if it's not working. On Shopify, I think it's fascinating what they're doing. They're a powerhouse. They're growing. I think they do have some challenges, particularly in their Shopify Plus market. It's a hard market to satisfy, just because there's so many things that larger merchants needs. It's easier to serve the smaller merchants that are just looking for something simple in one box. And so I think that is really the fact that Shopify Plus isn't growing faster is probably the only thing I would watch in the next year or two.
Okay, what else? I got about 45 seconds here, Rick, before we got to wrap it up. What else are you looking for in the next year? Not only UPS versus Amazon, but in e-commerce in general.
Yeah, I think Shopify Fulfillment is another thing. Especially since we're on FreightWaves, Shopify has invested in their own fulfillment network and 6 River Robotics. I have not seen anything interesting out of that group yet. And I keep waiting, and they've changed leadership at least once that I know about. And now the Shopify exec team has turned over like half of its executives. And so the fact is, I don't know any large to medium to large merchants that are seriously considering Shopify Fulfillment Network over any of the options like Flex or Deliver, or like 3PL Center. Like pick a logistics provider out there for 3PL or freight forwarding or anything. Shopify is not really in that mix, for any kind of medium high volume scenario.
All right, Rick, thank you so much, man. I will definitely be reaching out. We'll have you back on sometime soon. Thanks for your time.
All right. Thanks a lot, guys.
All right. See ya. God, interesting stuff. I like Rick a lot. He's a very bright guy, one of the best consultants I think you can find around. I love having him on. Had him on Point of Sale, one of the early episodes, talked about different e-commerce fulfillment strategies. He's brilliant. All right, but that is pretty much all we've had for today. It's been a very busy show, but it's been fun. Thank you, Zach, so much for taking the time, and thanks again to Rick. We will be back next week. As I said, I've got JP Hamstead, the Director of Passport Research, on with me, and also he's our local hit piece extraordinaire. He'll be on. He'll be on with Amit Mehrotra from Deutsche Bank. He is probably the most bullish equity analyst on the transportation space right now. Hopefully, JP can bring some bearish thoughts, and Amit will bring the bullish. We'll have a nice debate on brokerage earnings and the next year. Also, if you want an even deeper deeper dive into Amazon Logistics infrastructure, point of sale tomorrow. My other show at 1:30 Eastern. I'm diving deep with Mark Wolfrat, who has more knowledge on the Amazon Logistics infrastructure than anyone outside of Amazon. So join us then. We'll see you again next week. Thank you so much. This has been episode 68.